Hello and welcome back to Explain the Charts. Today, January 15th, 2025, we're delving into the fascinating world of NZDUSD. Recent news indicates a mixed sentiment surrounding the pair, with some analysts predicting a range-bound movement between 0.5570 and 0.5835, while others anticipate a bearish trend based on current negative trades. Let's see what the charts tell us. Looking at the daily chart, we observe a recent dip in price, potentially indicating a bearish pressure. However, it's crucial to note that this dip isn't exceptionally steep compared to previous price fluctuations. It could also be a temporary pullback before a potential bullish reversal. The volume appears relatively stable during this period, implying consistent trading activity but not indicating an overwhelmingly strong directional bias. Let's transition to the hourly chart to gain more insight. The 1-hour chart provides a more granular perspective on recent price action. We can see some short-term fluctuations, but the overall direction is still ambiguous. This supports the range-bound prediction mentioned earlier. It is hard to confidently go long or short. Further, the hourly chart does not confirm nor deny the trend seen on the daily chart. To further explore short-term dynamics, let's examine the 15-minute chart. Here, we look for confirmation of the aforementioned trends. Notice the volatility. While the 15-minute chart is less likely to give us major directional insight compared to the daily chart, it gives us a granular overview of price fluctuations. High-frequency traders are more likely to utilize this view of the chart. Now, let's focus on a specific period within the past week on the 1-hour chart, specifically between timestamp 1 and timestamp 2, which shows a noticeable spike. This is important because it is near the 0.5835 predicted high, which implies this high has been reached before. This suggests that this price level may serve as significant resistance. The 15-minute chart may help us to observe the behavior at this particular high and the surrounding area. Analyzing the 15-minute chart within this range helps us understand the nature of this resistance better, but does not provide insight into whether it is a strong or weak resistance. Back to the daily chart. The daily chart shows that the 0.56 level served as support multiple times, suggesting it might continue to do so in the near future. While past performance is not indicative of future results, this strong support level is an important feature of this chart that cannot be ignored. Additionally, there seems to be a slightly ascending trend in the medium term. In summary, key price levels to watch are the resistance around 0.5835 and the support at 0.56. There is a high likelihood that these levels will hold some weight, and they are more likely to hold if the news continues to show bearish sentiment or bullish sentiment above the 0.5835 level. The price action will be what is most important, and therefore a sharp break below 0.56 would warrant bearish consideration, and conversely a break above 0.5835 would be bullish. In the near term, I predict a range-bound movement, while in the long term, a slight upward trend is plausible.